All right, what is up, everybody? Divine Hood here for another video today, and I'm primarily going to focus on ETH and Hbar. I did want to go over a couple viewer questions as well, and just a quick update on Bitcoin. We're pretty much just consolidating on Bitcoin right now. If we zoom in here onto the 5-minute, you can kind of see we are in a consolidation pattern. So we had the dump. Now we're consolidating sideways, and we're consolidating in a symmetrical triangle, which usually is a continuation pattern. So you could see 4 lower highs here being made, 4 touches of the upper part of the triangle. We have our touches on the bottom here like this. And usually when you see a dump into a consolidation pattern, you consolidate for a while, and then it's more probable to continue the dump to the same direction that you entered the dump from. So that's just on the 5-minute time frame. Bitcoin here looks like we're starting to consolidate in this triangle, and I do expect it to break down. That doesn't mean it has to break down. It might do a fake out as well. We might break to the top to take these highs here of the consolidation and then dump. Watch for fake outs on these low time frames, especially. Anyways, though, I do expect Bitcoin to continue lower. Now, real quick here, I didn't talk about this in my video earlier today. I'm going to zoom out. Let me delete this before I zoom out. I'm going to zoom out to the weekly chart. I'm going to cover something on the weekly chart. So let me go ahead and hide the pitchfork. And let's go to the weekly chart. All right. Let me get rid of this stuff that I showed you guys. I'll just hide that. That's our box of support. Now, I talked about this price action generally right here on the weekly chart and how it is a key log channel based off of our 2 prior all-time highs at 65K up to 69K and then down to our bear market lows here. And you can see how beautifully this channel has been respected since 2020. So this has been a very important channel. You can see it's when we broke it, flipped the midline to support, pumped up. Now we're coming to the top of the channel. And when I first started making videos, this was like probably middle of November, late December, or early December, late November, early December. I was talking a lot about this channel and how about 95 to 100K was going to be an important level. And even if we wick above it, if we close like a weekly candle or monthly candle back within this channel after seeing like a fake breakout of it, we could see a bigger retracement to the downside. Now, check this out, you guys. Let's zoom in here on the weekly. Let me hide this daily level. You can see we had a couple attempts at when we first broke it on the weekly level. We wicked below it, but we held above. Then we wicked below it again, held above. Wicked below it a third time, less of a wick each time, held above. Now we broke it to the downside. We closed the weekly back inside the candle, back inside the channel. Now that's important. Next weekly candle, we tried to break out of the channel. We didn't. We rejected and we closed within the candle. Now this is our third week, our first, well, not our first open within the channel, but our first candle completely within the channel so far, and there is a possibility that we see some sort of like higher time frame distribution pattern that happens here, whether it's a model 1 or a model 2 distribution, and then we might dump to these 70K levels that I talked about earlier, which is the point of the value area high of this range of the last 6-7 months price action in confluence with our golden pocket pull from the last big weekly low to the weekly all-time high. So this is a real possibility. We could range here maybe until, even March, April, May. Who knows? It's too early to tell yet, but it wouldn't surprise me if we do start to form a distribution pattern up here at the top of this. This channel is based off of cycles, the cycle highs of the last 5 years or so. So this is pretty important here. We can just expect it maybe even on the daily to start to form a distribution range on the daily and then dump down here. So it's something that we need to be watching for as well. I still think this channel is a really important channel. And if we start losing this range, you guys, pretty much the lows of this range, 85 to 87K, Bitcoin's going to be in real trouble to come down back down to the 70s, because you can look here. There is not much support in here. Fast move up can mean fast move down as well. Now, of course, we do have a CME gap down, I think 77K ish. There's other Fibonacci levels before that as well. But this is something to watch for. Fast move up, fast move down. And if what I just saw happen with Bitcoin and MicroStrategy, MicroStrategy is down quite a bit more than Bitcoin. And as we know, Michael Saylor's been doing these leveraged bets on Bitcoin by issuing debt based in their debt notes based in their company, and buying Bitcoin with it. Well, they're trying to take on $10 billion more of debt when right now they're only at $330 million of debt. So if they approve this and the debt gets approved, yes, it's going to give him more money to buy Bitcoin, but a lot of his investors are de-risking off that because they think he's taking on too much debt and he's going too quickly with it and buying at stupid all-time highs when he knows better, or he shouldn't be. Even if you think it's going to go higher, you wait for a pullback. Now, if he doesn't get that new vote approved for the $10 billion in debt, then he's not going to have any more money to buy Bitcoin. And Michael Saylor has been driving a lot of this big push up since the election. So it's kind of a lose-lose situation. And I read about this through the Kobayashi letter on Twitter or X, and they do really good research. And so that's where I got that from. Just wanted to let you guys know, be transparent there. But he made a really, really good point when he was talking about that. And so that is something concerning that we need to be watching about on Bitcoin. If we do start to see kind of an unwinding of this leverage play that Michael Saylor's been doing, we could definitely come down to 70K, or we could definitely form a larger distribution pattern up here and then drop. All right, so that's Bitcoin. Now, the next one I am going to go to is Ethereum. Ethereum here. I did some analysis on Ethereum a few days ago, and really we're kind of still in that same Ethereum range here where we should be looking for this. So let me zoom in here onto, I still think the bigger, before I zoom in, I still think the bigger support is this 3,000 to 2950, 2960-ish level. Here is our major level of support. We've got the swing failure pattern of these last semi-equal, all these equal daily lows down here. We've got a lot of liquidity down here before our last parabolic move up. So there's a lot of longs that longed in this last 5 or 6 candles that could be still holding positions. And then we have the golden pocket pull on the last big daily move up. So from this low to the highs up here, we have our golden pocket resting there. We also have our anchored VWAP from the lows of this low as well. So that's a very important anchored VWAP that if we come down there in confluence, so there's multiple, and then it's also the bottom of the major pitchfork where you can see we rejected twice to the dollar from the pitchfork midline. And right now we are chopping within the band, the lower band of the pitchfork. So on more of a macro analysis, I do think this is the level I'm interested in taking a swing long from, maybe even possibly some spot buys. We'll see. We'll see how it looks when we get there. But you can also see this level is a very important. Let me turn off the magnet. It's been a very important level, a support resistance level. So you can see support resistance flip level just right around there, right below it a little bit. You could even, pull this a little bit higher here like this. And you can see held this support when we were above it, held this support again. We lost it, held. Now it flipped to resistance, flipped to resistance, flipped to resistance, flipped to resistance. This is on the daily time frame. So this is pretty big resistance and support. When we finally broke above it, it flipped to support. That's where we hold those last lows that I'm interested in looking at taking. And then we pumped up since we rejected from the midline. If we lose this band of support we're in now, it is highly probable that we come down to the bottom of the pitchfork, the golden pocket, and the SFP as well as the anchored VWAP. So 3,000 to 2,965, maybe even a little bit lower, like to 2,900, 2,800. That's going to be looking real juicy for Ethereum as a possible long. Now, with this long, if we get down here, you're going to want to see bull divs on your oscillator. You're going to want to see the price action making these lower lows into the golden pocket, into this bottom of this pitchfork, and you're going to want to see some higher lows being made on the momentum waves. Maybe we get another flush down here. So we're at the bottom now. Maybe we kind of can range in this thing for a while, let the oscillator have some time to come up, and then we make another, the crash brings us to go down like this. but we make a lower momentum wave or a more shallow momentum wave, and then we could see that bullish divergence, and hopefully by then money flow will kind of be starting to come back up too, and that would be a really good sign of daily bull divs at this area, or even 4-hour bull divs would be really nice to see at that area. So we are possibly setting up the oscillator to see those on the daily as well. It's looking good for there. That's a major level from this golden pocket at 3020 down to 2964, but really even a little bit below that. I would say down to like 2900 is definitely a support area, a major support area you need to be watching. Now, if you want to play more conservatively, you can wait for the SFP to confirm. So say we come down on a 4-hour candle, we hit directly into the 0.65, which if you're really trying to snipe it, that's probably the level, because that's also where the anchored VWAP is. And if it takes some time, the pitchfork band might be in alignment with that. If it doesn't happen till like towards the end of January, January 22nd or so, 21st, 22nd. So that is a level to be watching. Now let's zoom in here. Let's go on to the 4-hour chart. You can see how nicely this pitchfork has just been trading. We rejected from the midline, came back up for another try, rejected from the midline, and we front ran it just a little bit because it was a swing failure pattern. Once again, these swing failure patterns really work. So there's the liquidity there. You can see we swing failed the liquidity. We took the liquidity, went high enough to stop out the traders that put their stops above this high, and then we had the big aggressive drop to the downside. Now, just like Bitcoin's trading in a band right now, Bitcoin's trading in the upper band of its pitchfork. Well, Ethereum is trading in the lower band of its pitchfork, and you can see how nicely this range right here is forming within the pitchfork band. Yeah, we did see a deviation down here on that really big liquidation cascade that happened on Christmas Eve. But we are seeing this band is holding really nice, and it's acting really well as support every time we come to the bottom of the band. And when we get close to the top of the band, we are rejecting. Now, we haven't actually touched the top of the band yet, which I'm going to go into right now, because if you look at this golden pocket here, the smaller one that I made, it is just from the last, this is more local trades, okay? So if we zoom in on this, you can see our last high that we had that's within this range. And it's really kind of a double top. We didn't actually take this high, so you could pull the fib from this high here, but I don't like that just because we dropped so far on the last one. So I'd pull it from this high, and then you could go to the lows, which now we did make new lows here just earlier today. So we do have, let me delete this smaller one now. We do have this new golden pocket pull. And as time passes, it's getting a little bit farther away, but we know that what I call the JC pocket, the Jason Casper level between the golden pocket and the 786 is really that level of resistance that you want to look for. If it's above you, you want to look for it as resistance. If it's below you, you want to look for it as support. So if we do hold this band over the next night or so, and then we start to pump up, this right here, okay, 786 in confluence with the top of that band. We also have the anchored VWAP there. Now this anchored VWAP is pulled from the last big high rejection from the midline of the pitchfork, right up here. So that's a really good confluence, around $3,500, $3,494 on Bybit here is a level to be watching for a local short trade. Now, that is if we continue to kind of consolidate. That would also kind of show, I mean, this is more of a double top, but you can kind of see this is kind of like, wrong thing. This is kind of like a triangle forming. It's not so nice. I don't like it too much as a triangle, but you could, say something like this, or, I don't know how you'd want to pull that, but, yeah, I don't like that as a triangle actually at all. So it's just a range. It's a range that we're trading in. Let's pull the volume of that range. Let's look at the volume of that range. Okay, so value area high is right in that area too. Golden pocket value area high. That's probably one level. I'd look at these as separate trades. I'd look at this here as an area to possibly short if we come up here and reject from here. We also do have our prior two highs here. So like an internal liquidity grab if we're going to continue to range this high and this high here. And then I would look at the second trade is what this drawing is showing up here at 39.94. So I would probably let myself get stopped out here. Or, I mean, you could take it as one box. If you're doing that, your stop losses, I mean, if you ladder in, just make sure you're setting your stop above these highs, because if we break these highs and we continue, you're wrong, and it's probably going to keep pumping. So say you did want to short in this box here. Let's just do it from here. You'd put your stop below these double highs, give it a little bit of breathing room, right? So you have a 2.5% stop, and then you'd want to shoot for the lows of the range, not there, the lows of the range. I mean, you could shoot for the value area low as your TP1. That's already going to give you a 2.5 risk to reward ratio for your TP1, which is pretty good there, because we do have all these prior lows here that are semi-equal, and it's the value area low. So that would be your TP1 there. But then you could do TP2 down at these lows here. And then, of course, your final TP could be in this real big box of support here, which would be real nice. You know, a 6.2 risk to reward ratio there. And that would be a local short that I would be interested in looking. If you are interested in looking for that short, when you come up to this area here, you're probably going to want to be looking for bear divs on like the 15-minute time frame, the 6-minute time frame, 5-minute time frame, maybe even the hourly time frame. Also, you're going to want to see money flow kind of starting to curve down on some of those lower time frames as well. So that's the local area of support that I would be watching on Ethereum here. We do have this also, this pull here, this Fibonacci pull up here. And this Fibonacci pull is from the last rejection of the pitchfork way up here at like 4,100, 4120-ish, down to these lows that we created, these flash crash lows that we created on December 24th. So if you do the fib pull from the high to the low, you can see our golden pocket is resting right here. And this golden pocket is also an internal swing failure pattern of the last little push up before we got a last aggressive leg down. That's an area to be looking for. I do believe there was a naked daily point of control there. Let me see. Yeah, there's a naked daily point of control there too. So that's why I also had this area marked out. So this could be like another box that you'd be looking at here as a possible short position. Now, if you do that short position and you do the swing failure pattern, you know, you swing fail pattern into the 0.65, if you're wrong, you got to get out soon. I mean, you could put your stop above this high, but that's too far for me. So if we break this, then I'm getting out right away. I wouldn't hold on to it. 786 is a little bit higher. I wouldn't be too interested in that. Okay, let's look at, let's zoom out here onto the weekly chart and let's look at the weekly levels. So the weekly up here has already been taken. You can see with the next weekly candle. We do have a new weekly support level though. So we do have this level here is a weekly support level we could be looking at. Let's mark that out. And then let's zoom into the daily and let's look at the daily. All right. We do have the daily up here, but that's kind of far away. This daily here as well. Okay, so look at more confluence for this 786 short position that I just showed you guys. Look how well this looks. So we also do have a naked daily up there. Not a naked daily point of control, just a daily level that hasn't been touched yet. And it is literally exactly right on that 786 too. So this, let me zoom back into the 4-hour chart and show you how nice confluence is developing right here. So right here, we have the anchored VWAP from the last major highs on the weekly. We have our daily, our new daily level. We have our 786. And then we also had that, I think it was a session volume profile that I just showed. Nope, no session, no naked daily point of control there. So, all right. So that's looking like a real nice area there for a possible short. And it's the top of the pitchfork as well. So the top of the pitchfork band, not the pitchfork itself, the top of the pitchfork band that we're consolidating within. Oftentimes, you guys, when we see a bigger, so let me clean this chart up a little bit here. I'm going to go ahead and delete this profile there. I'm going to hide this double top. And I'm going to hide these boxes now so you guys understand those boxes are levels to look for shorts. Okay, the purple boxes here and here. And you can go back, just rewind the stream a little bit if you want to get those levels. All right, so you see, oftentimes when we see a rejection from a midline like this, a really aggressive rejection, and then we start to consolidate within the band, which is very, very common. That's why I leave the band on now. I used to not do it as a band. I used to just use the 0.5, but now I've been using the band because oftentimes we consolidate within the band, and we see this on Bitcoin happening right now. We see it on many coins, a consolidation within this band here, just this band area. And anytime we see that, we usually it's a consolidation pattern, and usually a consolidation pattern is a continuation of the trend. The trend is down right now. So when the trend is down, you consolidate, just like I showed you guys on the 5-minute chart on Bitcoin. We had the trend down, we were consolidating in that 5-minute symmetrical triangle. Probabilities are higher that we break. If you dump into the consolidation, you consolidate for a while, you dump out of it. That doesn't mean it has to happen. That just means probabilities are higher for it to happen. And that means we could just dump to the SFP, these lows, have a fake out, and then come right back up into it. Bitcoin tried to do that today after taking the 92K liquidity. It tried to come back up into the pitchfork band, but it couldn't. So that's a possibility to be looking for. But with this consolidation here, after a dump, it's looking more likely that it's going to dump to the downside. And if it does, we've got our major level of support coming up here, just a bit lower, which would be nice to see. Depending on how aggressive the liquidation and cascade gets, this SFP could come right down to the 0.65 in 1 hourly candle, and then close the hourly candle at or above this SFP level, and then we could get the move up. So especially with altcoins with less liquidity than Bitcoin. So that is something to watch for on Ethereum as well. Now let's zoom into the hourly chart. I mean, honestly, I would just be trading this range. You guys trade what's in front of you. So local trades, you could be looking at that 786 up here at 34.94. And then for local supports, we do have a fresh weekly down here. This fresh weekly is, I believe, in confluence with the, let's see here. It's pretty close confluence with this value area low. And then we also have all our semi-equal lows right here of this little range. So I would say the SFP into the value area low and the weekly is something to be looking for as local trades. Now, if you're going to long this, your TP1 would definitely be the value area high and the golden pocket. And then you could also TP some at the 786 in the top of the pitchfork band here. So that is a level to be looking at there. But this is looking pretty nice with this naked weekly support level in confluence with the value area low. We could do a golden pocket pull as well from this last low to this high up here. And look at the 786 is right there, you guys. So look at the box. I mean, just the confluences end up showing themselves on the chart if you know what to look for. So purple box, definitely an area to be looking here. And that is the local levels I'd be playing. I'd be playing this level and this up here. That's all. Now, we are still holding the lower part of the band. You can see a lot of wicks below it. Let's zoom out to the 4 hour again, and you can see probably a little bit more clearly. You see how there's a lot of wicks into the band here, like 4 or 5 into the band here, few 4 or 5 more into the band here, but the lower part of the band is still holding overall. Until we lose it, it's also the POC right where we're at too. So until we lose that POC in that lower band, it might hold. But I do think that we could at least come down lower here, especially if Bitcoin's going to drop to 90.5K or 90K-ish level. Then Ethereum will probably come down too. And I'm also, the big level I'm looking at is down here, you guys. This is the level to really be watching for. Local trades here and here. And then also, if we want to zoom out here, we have that 37.19, which is our golden pocket from this high to the low. If we go to golden pocket, you can see our golden pocket is right above the swing failure pattern of this internal liquidity grab. So like I would say 37.25 to 37.57, because with the swing failure pattern, you want to wick past this a little bit. So a wick into the 0.65 and then come back and close the candle, an hourly candle at or below this level would be a nice confirmed swing failure pattern. And even if you did that, you would bring it back down to the value area low or high, value area high of this range. So if you shorted this here, say you waited for the swing failure pattern, you shorted the touch of the 0.65. Now in this case, I'm not comfortable putting my stop all the way above these next local highs here. So I would probably use a tight stop. And if it wicks past the 0.65, then we're likely to come up to the 786 or even higher. So I would just do something like this, a short 1%, make it a 1% stop loss. And then now that kind of sucks because there's no technical like level to give the invalidation, but you could do your first take profit at the value area high here, or you could do your first take profit at the bottom of the band, which by then the POC might be pushed a little higher with this. If this price action pushes up there, it's obviously going to drag the point of control up a little bit as well. So the point of control might be in alignment with this part right here. It's already pretty close to it. And then you go. So that's something to be looking for there. Higher probability to break this to the downside because we dumped into it, consolidate. Higher probability to dump out of it. So that is my update on Ethereum. The levels that I'm watching, the boxes that I showed you guys. Let's zoom out one more time to the weekly real quick and let's look at one last thing. All right. Yeah, I'd say, all right, let me do this real quick. I'm going to hide a bunch of the stuff that I just put on there just to make the chart a little bit more clear. I've got my alert set there, you guys can see as well, at that $3,000 level. All right, so if we're zoomed out here on the weekly, we could look for the last big weekly low to the high. Oh gosh, yeah. Okay, that's a different, little bit different golden pocket than the one that I pulled, but you can also see that 2860 is around the 2960, so it's a little bit higher. But look at this again. If you guys want to look at support resistance levels and how nice they're respected in confluence with other things, check this out. That was our last high here on the weekly chart. So we pumped up into it. We had a little rejection before breaking it to the upside. Let's do this. We'll change it to an SR flip. So when I say SR flip, that means support resistance flip level. So that's a very important level that it was acting as resistance. We would reject from it, but when we broke it to the upside, it flipped to support. And yes, it is, I would say, an area of support, not an exact level, but it's like this area here. And you can see once we broke it to the upside, we flip it to support, hold it as support, pump up higher. We made a lower high. We probably hit it. That's probably the 886 there, or actually even higher. Fell back down to it again, held again. Then we pumped up again, made a lower high. Finally lost it after making two lower highs. Dropped down and it flipped to resistance again. You see it flipped to resistance 3 weekly candles in a row. We tried, came back up here for another weekly candle. Let me zoom into that so you guys can see that better. So 3 weekly candles rejected again, came back up for another test, rejected again on the weekly, came back up for another test over these 2 weeks. Couldn't do it, rejected again. Finally, we're able to bust back through it and pump above. So we pumped above, we took the liquidity from up here. You can see that we took the liquidity from up here, and that was also our pitchfork midline. And now if we do drop, it's going to be acting as support again because we flipped it to support again by breaking it to the upside. So if we come back down into this general area, and then this could, even if we really want to get boring on Ethereum, it could be a giant range. So it could be something like this, and the range just could continue. You know, we could be going here, 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 here on the weekly, just a big range at the like between, 2,500 and 3,500 or 23 and 4 grand. So that is Ethereum for you guys. Just keep an eye out on that. All right. Next up is going to be Hbar. Hbar. All right. Okay, I think I did some TA on this a few videos ago. Someone asked about this. So you guys can see I'm on the weekly here. I have already some boxes in place here. We do have the weekly resistance is actually now hit into. So that weekly is not naked anymore. You can see we wicked into it and we got the perfect rejection from it. It was so it's not as important now that we rejected from it. Actually, I'm going to take it off the chart. Weekly supports are way down here. We don't need to look at those. Too far away. We are consolidating within this bigger kind of horizontal range, just like I was talking about Ethereum possibly creating. You can see that we're possibly in something like that on Hbar as well. Let me hide this real quick and let me look at another possible channel. If we go from the all-time high down to this lower high that we made on the weekly, and let's put it down to these bear market lows. Okay, look at this. Let me clean up this chart so you guys can see this. So I'm going to hide this pitchfork real quick. I'm going to hide this range. I'm going to hide the box. I'm going to hide this. All right, check this out, you guys. This channel that I just created based off these two pivots, even though I created it off two pivots that happened, the past price action is still being respected because price action is based off sentiment and psychology. So we're in this trend on Hbar, and the sentiment it's still being respected, even though this pivot bounce from the midline happened before the channel price action was created, because the pivots are from this high and then this low. So all three pivots were made after this price action, but you can see that it still respects price action because it's based off trading psychology and trading sentiment. Markets run off that stuff. So, all right. So yeah, it's really being nicely respected here. You can see we tried to get above the midline a bunch in here. We even had one giant wick above it, but we couldn't close above it. And also that was our anchored VWAP from the all-time high. So anchored VWAP from the all-time high in confluence with that channel midline rejected us many times on the weekly. We finally dropped back down to kind of these lows here. And then we got finally a push up through it, an explosive push up through it. We're up here now. So let's go ahead and turn that pitchfork back on. You can see this pitchfork was also being really nicely respected. Let me check something on this pitchfork. All right, let's do one more thing. Let's change it to the original pitchfork and let's see. Okay, I'm just going to hide this pitchfork for now because it is not as relevant as it used to be, but we can look at a new one. So we can go from those channel lows, the bear market lows, up to the next big weekly high, and then down to the lows that were created here. All right, so this is very similar to what happened on XRP. And if you guys watched my XRP analysis, I think it was yesterday that I did it, we had busted all the way through this pitchfork that looks like a straight up push on the weekly, but I bet you if we zoom in on the daily, we're going to see some of those bands being respected. Yeah, okay, so look at this. First time we hit into the band on the daily, we tried to break it. We couldn't. We dropped to the bottom of the band, but held it as support on the daily level and then had a push up through the midline to the top of the band, rejected, tried the band again, rejected, finally busted to the top of the band, held the top of the band, held the top band, dropped to the bottom part of the top band. I know that's confusing. Held it on the daily and then busted up through the top of the pitchfork down. And now we're holding and back testing the broken pitchfork as support to see if we can flip this to support and continue higher. So bust up through it, flip it to support, continue higher. So far it is holding. Let's look at this in a more, let's turn on some of these other things that I had here. Okay, the box down there. Different channel. Okay, so I probably was looking at that the other day too. So let me look at this list. All right. Okay, so let's just zoom in here to this price action that's relevant for us now. So obviously, after the explosive movement up, the parabolic move up, which is impulsive move up, we're starting to see a range form. You see this range forming, so you could pull it from here all the way to present day. Here's our range that we want to be paying attention to right now for local trades. Now, let's do a fib pull from the last daily low of that range to the high. All right, check it out, guys. The bottom, the golden pocket is right in confluence with this pitchfork, and this is just being hit into yesterday, which is still my day. I'm still in the same day. These two candles are still in the same day for me because this candle closed at 5 p.m. Right now it's 9:30 at my time. So we're hitting into it right now, and it's this golden pocket as well as the pitchfork support. So we might hold it here and we might see it move up again. It might hold again. If we lose it, let's change this to the JC pocket. And okay, our 786 is down where our anchored VWAP was. Our anchored VWAP, we pulled from the last daily low here. So after we had this first big impulse up, we made a little correction here on the daily, and we pull it from this low here because this is an important level of support now. And then we could pull our anchored VWAP from there. You can see every time we hit into the anchored VWAP here, even though that's a giant wick on the daily, we held it. Here we wick past it a little bit, but we closed above it. Here wicked into it again, but held it as support and closed above it. So now this anchored VWAP is still being respected as support as well, and it's in pretty close confluence with this 786 as well. So with Hbar, we could be looking at support right now. We could bounce from where we're at right now. I don't like that we wicked here below the golden pocket, and now we're still dropping. So the golden pocket to me is not as strong as if we bounce from this candle here and then started to make the move back up like today or like right now. So if we don't hold this over the next few hours, we're probably going to come lower. And we do have the 786 anchored VWAP, which is like this box here. You could be looking here. There's also a daily level there. So check this out. Right here, this daily level hasn't been touched. Candle close, and candle open in the same area. And it's a daily level that hasn't been touched. It's right in confluence with the box. So we have the daily level there. We also do have a fresh daily resistance right up in perfect confluence with the point of control of this range. So we definitely need to mark that out, because anytime you have a daily in confluence with a range POC, and then once again, we have our daily up here, which is in pretty close confluence with the value area high. So you could even mark this as a box up here. These are our levels that we want to be paying attention to. And now we can look for more confluence within these boxes to see if there is more strength within these things. So, okay, so already right away, these three boxes are levels to be looking at. I mean, with a daily and a range value area high here is enough to start looking at taking a possible short from there. Let's pull the anchor VWAP from the high, the last big high here. Okay, so, I mean, you can see it was holding pretty well, but when we busted up above it, then we broke it. So it is still kind of being respected. I'm not going to keep that on the chart. Let's look at... All right. Let's zoom in onto the 4-hour chart. Let's look at this here. Let's go to our session volume profile, and let's look for naked daily points of control. All right, so there's no naked daily points of control here that haven't been taken. You can see all of these have been taken, so really no naked ones yet that are important. Let's turn that off, and let's look at fair value gaps. All right, so I do see this fair value gap here within the box. So there's more confluence within this box, this purple box that I drew right around. Let's see, if I click on the box, it should tell us the levels. So from 25,649 to 25,289, that's kind of the box of support that I'm watching. And then up here, I do see this up here, which is kind of interesting. We have our internal liquidity grab, and we have a fair value gap up here, a 4-hour fair value gap. So we could see a SFP of these lower highs here into the fair value gap. Say we SFP just a little bit to fill the fair value gap, and then we close at the SFP level or below it. That would be a confirmed SFP that I might be willing to take. Let's look for more confluence there. Let's do a pull from the high to the low here. And our golden pocket's a little bit above, but we did find more confluence for this purple box up here. Look at the 786 is right up there as well. So we have our daily, our value area high, and our 786 right in this purple box of resistance up here. As far as this goes, let's look at the 0.5. I think it's going to be a little bit below it, but yeah, it's a little bit below it. It is definitely an area to be watching, because a 0.5 is a correction target. If we're going to continue this kind of correction to the downside, sideways price action. I do think the daily here at the point of control is a level to be watching. You could even get real degen, and you could do a fib pull just from this last lower high that I was talking about to the lows we made earlier today, And let's go to the golden pocket. And yeah, it's all right. No, I don't even like that because we already came up and touched it. See, from this high to this low, we came up into the golden pocket right here and we rejected perfect from the golden pocket. So that golden pocket has already been touched and rejected from. Let's look at the 786 though. It's a little bit so yeah, you do have that there. I guess you could mark the box out to be there, but I don't really like that. I'd rather take it right from the daily in the point of control, but you might wick a little bit past it to the 786. All right, so that's your levels to be looking at here on Hbar. Local levels, we have our bigger levels. Let's actually turn off these fair value gaps and let's zoom out to look on much bigger levels. So if we drop back within to this pitchfork here, if we lose all of this kind of that I'm looking at, this purple box here and where we're at right now, and we lose this anchored VWAP and flip it to resistance, then we could probably be expecting a push down to this band here. And if we do a fib pull from the last daily low here to the highs, yeah, the 786, by the time that happened, it would take some days to get there. So the 786 is in confluence with the bottom of the band. And let's look at the golden pocket here. Golden pocket. Okay, golden pocket's a little higher, so I don't really like that. But the 786 is there, and we do have that daily order block there. We actually have a fresh daily level there too. So look at this. Fresh daily level right here. Candle open and close together. Daily levels right there, but we have the whole daily order block kind of, you know, this order block right here. So we have our daily order block there. Our daily level is obviously the bottom of the order block. 786 and pitchfork band right there. This would be a level that I'm watching for taking as well. If we see if we do drop back within the pitchfork and then like reestablish it as a resistance. So I know this chart is looking kind of messy, guys, now bear with me. But say we kind of lose this range to the downside, drop a little bit, maybe take this low here, SFP this low, and then we come back up to bearishly backtest the pitchfork, confirm the rejection, and come down. That is the level you're going to be watching right there for some sort of move. Now, let's delete this stuff, and let's do a little bit more analysis here. The last big push up, so from going from the high to the low here, our huge range 786 is in confluence with the midline. So it's, and then also the big daily or that big weekly channel that I showed you guys. If we zoom out onto the weekly, the very first descending channel that I showed you guys on this TA analysis. So from the all-time high to the next lower high to the bear market lows, you can see now I'm going to zoom back into the daily. You can see that channel midline, which is this dotted white line here, is in pretty close confluence with the pitchfork midline and the 786. So this is more like a big spot zone, but that would be a spot buy for me. Spot buy. All right, so that's an area to be looking for spot buys. We also do have very close to that is the SFP of these lows. So the last big daily lows here, you see we have the swing failure pattern of those into it. So multiple confluences once again. Now, if we drop below that, there's probably some real trouble happening. So we'll have to reassess the situation once that happens. For now, that's what I'd be watching out on Hbar, you guys. All right, one last thing here. I'm going to go into the comments. This guy here, Kevin, really good comment he asked me about. So he said, I want to ask which fib levels do you tend to focus on besides the 0.5, the golden pocket? Also, how do you interpret the bounce from those levels? For example, a bounce from the 382 shows the trend is still very strong, and a bounce from the 0.5 to 0.68 is the best pullback area to look for entry, and a bounce from there is still strong. From what I know is the price breaks the 618, the trend tends not to be as strong anymore, which, yes, you're correct there, Kevin, but you also got to remember the 786 is a pretty important level, especially for alts. But I don't understand what other traders use 786 or the 0.88 to look for a bounce combined with support. So I'm going to go back to here, and I'm just going to go to a chart that I don't use much. Let me just hide this here. And I'm going to explain fibs real quick to you. So, and this is important to understand market structure. So say the price action is in a bullish trend. So it's making higher highs, higher lows, higher highs, higher lows, higher highs. And then we want to see, and then it starts looking like it's going to break here, and we just made a lower low. So this was our last low. We broke it. We made a lower low. So we're changing market structure on whatever time frame that is. And say we break it, we come down to like this level here. Now you could be doing a fib retrace pull because you broke market structure. So if you break market structure either bullishly or bearishly, then on the next retrace, you're going to want to look for a lower high because market structure is starting to break bearishly. So you can look for a low high. So you can do your fib pull from the high of the move to the low of the move, right? And then your optimal level to be looking for the retrace back up to is what I call the JC pocket. Oops, let me get that off the chart. What I call the JC pocket. So the JC pocket is just it's a level between the golden pocket and the 786. So this little, I would say this box here would be the area you'd be looking for a retrace to for a short, and that would also kind of create what you would call a topping reversal pattern, which is a head and shoulder. So like say we come up here, reject from there, you have your shoulder, head, shoulder, topping reversal pattern confirmed, and then you could short that and bring it. And if you do reject from the lower high, then your target would be to take these lows here. Now, if you're looking for, say, okay, so let me get rid of this now. So that's a level. That's when you look for the golden pocket in the 786. But say you are going up doing this higher high and higher low price action here, and then you all of a sudden you see a huge crash to the downside. Like you see a huge crash to the downside, a quick one. Like kind of like what happened today on Bitcoin, a huge crash to the downside, and it looks like a strong impulse is starting, like a strong impulsive trend is starting. And you can look at the volume to see if it's an impulse as well, because if volume increases and it's doing like a huge crash where it's taking a majority of these higher lows that are created, that's an impulsive thing. And that's when you look for the 382, like I showed on Bitcoin earlier today, real time, how Bitcoin had that big crash. And then we bounced up to the 382 because the 382 acts as support and resistance in strong trends. So you have the big impulsive crash. Now you're going to be watching that 382 target, because if we come up to the 382 and we reject from the 382, that means that the trend is still strong to the downside. The impulse that is starting is still strong, and you're probably going to go make new lows. So the 382 is really good to look for stuff, support and resistance in strong trending markets, generally off impulsive moves. The 886 is often used in cipher patterns, which is a trading pattern that's used, like one of these patterns here, these cipher patterns, but it's also used in Elliott wave theory a lot too. And oftentimes in Elliott theory, you have your 5-wave impulse. So your 1, 2, 3 is being the most aggressive, most volume field, and longest wave, your 4th correction wave, and then your 5th wave. So that's your 5-wave impulse. Or I could actually show you. So you could go to the Elliott impulse waves. 1, 2, 3 is the most aggressive, 4, and then 5. And then usually after a 5-wave impulse to the upside, you have what's called an ABC correction to the downside, or some sort of correction. There's many different kinds. There's WXY corrections. There's ABCs. ABCs tend to be pretty common, and they're a zigzag correction. So one leg to the downside, a retrace up, and then another downside. And that also creates your head and shoulders pattern, which is a topping reversal pattern. Head or shoulder, head, shoulder. So that's another way to look for a head and shoulders pattern. Head and shoulders work if you can look at if they're in the right levels. I see a lot of traders that are retail traders that are looking for head and shoulders like at the bottom of moves. The head and shoulders pattern is a topping reversal pattern. And you also want to see volume confirmation as this is forming. Now, if we do see this ABC correction, oftentimes in a ABC retrace, the 0.5, so if I pull the fib from this, the start of A to the end of A here, and you go to the 0.5, that's one of the correction targets in an ABC correction. So you would look for a possible rejection. Now, the 382 can also reject you if it's a super strong trend. So, really, the two levels to watch for are between the 382 and the 0.5. If your B wave comes up into the 0.5 and rejects, like I showed earlier this week in Bitcoin, when we came up to that POC and the 0.5 and we rejected, I think that was 2 days ago, it was a corrective target. And then we dumped and we did make new lows. So that 0.5 is good to look for in corrective waves, especially if you're using Elliott analysis. It's a great tool to help you find that target for the B wave correction in an Elliott wave to the downside, and then a corrective wave to the downside. The 886. So oftentimes, if you're ranging, like we actually did on Bitcoin, this is a perfect example of this. Let me go to Bitcoin real quick. And you see, and then I'm going to zoom in here onto the 3-hour chart. And we're just going to look at this price action that we've been trading since December 19th. This range right here. You can see this range here. Now, we had the low that was made, and then we came up, and this was our dead cat bounce high, right? That was our first high that we tried to make. And so if you do a fib pull, if a range is starting to form, you do the fib pull from the high, from the low to the high, and then you turn on the 886. If you come down and you retrace back down to the 886, you can see we did bounce from the 886, which oftentimes you will see some sort of bounce from the 886. It is a good level to watch for. Even if you bounce from this 886, you're eventually going to take, the probabilities are that you're eventually going to come take this low here. Now, this is also based a little bit off Elliott analysis as well. So 886s are good levels that bounce from. In altcoins, actually in altcoins, you often see a retrace to the 886, but the 886 will hold and then the trend will continue. So say this was an altcoin, it would maybe do this and then continue higher, because altcoins just tend to retrace more than Bitcoin does. There's less liquidity. There's generally more wicks that happen on altcoins. So the 886 is a good level to watch for, but generally most of the time, if you come down to the 886 and even if you bounce from it, eventually you're going to end up taking those lows, which happened today here. You know, we ended up taking the lows. So and then I do believe as well, we did the fib pull from the next lower high to this high. And yeah, we bounced to the dollar from the 886. And I showed this real time in one of my videos. I was making the video literally right as we were coming into the 886 and we bounced. But you see, we bounced from the 886 and we made a lower high here. And then we just finally took them both. We took them both together. So 886 is a really good level to watch for. Let's see, what else did you ask in that question? So how do you interpret the bounce from those levels? For example, bounces, let's see. Yeah, I mean, it's just, so why do different traders use different fib levels? It's mainly based on how they trade. You know, a lot of Elliott traders like to use the 382, the 0.5, 886 is really big in Elliott wave trading. Me and Jason, like that JC pocket, that 0. The golden pocket to the 786. Oftentimes you will see that retrace to that level if it makes a lower high. If I go back to, where was it? No. Which one was it? It was one of these guys. Anyways, if you see that, not there. You know, if you're seeing like higher highs, higher lows, and then you break something to the downside, you change market structure. Oftentimes when you come back up, you can, now that you broke market structure, so say this was our low here, and you'd be looking for an MS break, market structure break. So we had the market structure break. Now that we broke market structure bearishly, you'd be looking for that JC pocket to short from. And Jason has really perfected this here. So you come into that JC pocket there. And if you are coming into that JC pocket and you see CVD, bearish absorption, almost every time that trade's going to give you a win. So you could short that, you know, like say you short the 786 tends to work really good. You'd put your stop above this high here, because if it breaks to new highs, your plan has been invalidated and you need to get out, and then you could bring it to new lows, you know. But you'd want to be seeing bearish CVD absorption on your CVD indicator. All right, so that's a little bit about fibs there. Hope that helped you. Thank you all for your support. Also, Big shout out to Crypto Lifer. I saw it in one of my comments that one of my viewers said, "Hey, I'm here from Crypto Lifer," and he pointed me towards you. Hey, thanks, Crypto Lifer. I'm really grateful you did that. Thank you for helping me grow, and thank you for giving me the shout out, man. I was watching one of your live streams today, and I really like your content. And you said something about the pineal gland and decalcifying the pineal gland, and I really think that's awesome that you have that consciousness awareness about you. And thanks for the support, man. All right, everybody, have a good night.